Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, just keep in mind a couple of things. Obviously there's risk involved with each trade that you take, so you want to make sure you manage risk in a way that makes sense for you. And we'll go over some ideas in that regard if we simulate a trade or two. There are some nice tools within our order window in our web trader and app that make the risk management side of things quite a bit simpler. Also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now from our main website, we can log into our web trader platform, which allows you to trade on both MT4 and MT5 accounts from the same location and with the advanced functionalities that you find within our app and web trader. So if you log in the upper right-hand corner here, you'll find yourself in our web trader platform. Now, there are some general headlines fundamentally that are occurring that clearly will be driving a lot of the movements on the markets in the next day, 2 or 3, or maybe even longer. But certainly in the next 48 hours, there's a big symposium that is scheduled to start this evening, US time around, I guess, 6 p.m. or so, 8 p.m. New York time. And that symposium will run through all the way to Saturday. And there are global economic leaders that will be speaking at this symposium. It's in a place called Jackson Hole, Wyoming. And there's a whole backstory as to why that location was chosen. And there's a history to that, but this has become a tradition each year with global leaders coming to Jackson Hole, Wyoming, the symposium which focuses on global economic policy, and it's occurring starting this evening and running through Saturday. And scheduled to speak as the keynote speaker tomorrow will be Jerome Powell. And there are some interesting topics that are kind of scheduled to be the main topics of this symposium. One being the effect of AI on global dynamics with the workforce, with the demographics of the workforce. They're going to talk about demographic changes globally with jobs and companies, etc. And then an interesting topic, which kind of fits the situation in the US anyways. They're going to discuss the rightful place of any type of political or direct pressure on the policymakers in the various countries, coming from political leadership or those sorts of forces that might try to put pressure on economic policy decision makers. And so it's kind of ironic because there's been a lot of pressure from the Trump administration on Jerome Powell specifically to try and get him to lower interest rates in the US. And with inflation having come down quite a bit, but still recently maybe some numbers came in a bit higher than expected, there's been a lot of pressure on him from the political realm, at least on the right in the US, to try and get him to lower interest rates. So it'll be interesting to see what Jerome Powell has to say tomorrow when he does his speech about that sort of pressure, because it's actually a scheduled topic for everyone to kind of discuss as well. I suspect there'll be some pointed statements without naming names about that type of pressure, and we'll see what exactly he has to say. But with this type of symposium, there will be leaders from the UK, from the European Union, from Australia, from different places that will be speaking. And typically each time this type of symposium occurs, there's a lot of movement. There's stress that's created in different markets because of the policy and the implications moving forward about what they're talking about with policy ideas. It certainly affects different markets and the strength of different currencies, the movement of commodities, and I think particularly the safe haven assets could see some particularly strong movement as there's talk about inflationary pressures. There's talk about the effect of AI on the workforce, and specifically talk from Jerome Powell about interest rates, monetary policy, and one of the main highlights is also going to be around the idea of patience and data-driven decision making. Is what I found as an expected topic that Jerome Powell is going to continue to talk about. And each time he has spoken about that in the past Fed meetings, the market has read that as meaning, okay, he's not going to lower interest rates anytime soon, because he keeps saying he's going to be patient and look at the data, and that he's afraid of the effect of the tariffs that the Trump administration has put on so many countries, and they're afraid of the inflationary effects of those tariffs. So I would suspect most all of those topics will be discussed, maybe not this evening yet, but especially as the speeches get kicked off tomorrow and into Saturday, a lot of those stressful topics are going to come up in the topics and the discussions. So in a nutshell, I think we can expect a lot of volatility between now and Saturday on especially safe haven instruments, maybe commodities, major indices. So let's keep that in the back of our minds as we look at any other type of fundamental news. That symposium really is the main focus over the next couple days. Now, if we take a look at the discovery section and go to the economic calendar, we will find some announcements today, and some of them are significant. I think, yesterday we saw some data out of Great Britain that showed inflationary CPI numbers were higher than expected, and we saw initially the pound weaken against the euro and then strengthen back up. And we did some trades yesterday on those movements in my later session yesterday evening. And now, as we come into today, we had PMI data, some of which came in higher than expected as well. If we look at the global services PMI, we see inflationary numbers here. The PMI flash expected to be at 51.7, came in at 53.6. Okay, that's Purchasing Managers Index. So upward pressure on prices, both CPI and now PMI numbers coming in higher than expected out of Great Britain as well. So if there's fears of inflation in Great Britain, that could weaken the pound initially, but at the same time, the thought process would be maybe they can't lower interest rates. Kind of the same situation that Jerome Powell feels the U.S. is in, that there's too much inflationary pressure still, and maybe interest rates can't come down any further. I know the UK has already lowered interest rates, but moving forward, high CPI and PMI data, maybe those will create some nervousness. So we can keep that in mind on any GBP pairings. Now, upcoming today, we have some announcements out of the US that have not occurred yet. So I think we'll focus in on the announcements that did not occur yet, and particularly the jobless claims have been an announcement over the past week after week that movements have become quite predictable as those numbers come in. So the expectation is pretty flat from the prior numbers to the current. They were 224,000, expected to be at 225,000, a slight uptick in expectation of jobless claims. Okay, that's jobless claims, meaning people losing work and applying for jobless claims for government payments. And so the higher this number is, that's bad news for the economy. Okay, typically weak for the US dollar strength. And if this number comes in lower than expected, that's good news for the economy, and that's typically bullish for the US dollar strength. And we can take a look in the advanced tools here. What have the movements done in the past as this data has come in? And so if we want to look 1 hour after the event, 4 hours after the event, whatever we choose to look at time frame wise, we can look at any currency pairing with the US dollar and decide what we might want to do as the data comes in this time based on how did this currency pairing move after the prior announcements that came in maybe the same way. So if we look at those that came in above forecast, meaning bad news, if the jobless claims today come in higher than expected, We look at above forecast, what happened with bad news on jobless claims, meaning higher than expected, the USD weakened. And it shows 100% of the time in the first hour after the event. So the idea there is maybe that's what you would have expected to happen. USD weakens against the euro if they get bad economic data in the US, and we can confirm that indeed the 3 times that happened over the past months, indeed the euro climbed against the USD. Now, 2 of them climbed really strong in the first hour. We're talking over 60 pips, these 2. This one just went up a little, but had you bought on all 3 of these immediately after the announcement, it looks like most likely you'd have had nice profits, okay? And you can look and see after an hour, it went 53 pips, average range movement. If we say in the first 5 minutes, the movement was 16 pips, average range movement. So none of them went above 20 even. So you have time after the numbers come in. In the first 5 minutes, we see this movement didn't take off right away. And it doesn't take 5 minutes to place a trade. Obviously, you could place a trade in 5 seconds once you see the data come in and maybe even catch it at a lower spot. And after an hour, we see 100% of the movement was up, okay? And after 4 hours, there's some pullback. So it looks like the initial strongest movement was in that first hour. The majority of them still up after 4 hours, but it was stronger after 1 hour, the relationship, okay? What if this comes in below forecast, meaning good news, less jobless claims? Look at the opposite movement. In the first hour, look at all the red going down compared to the green going up. Not only was there more numerous movements down, but they were larger on average than the upward movements. Okay, 3 of these reaching a good 29, 30 pips movement down in that first hour. Average range movement, 35 pips. And so 2/3 of them dropped in the hour after the announcement. Complete opposite look of when it came in above forecast. So you see there's a direct relationship here between how these currency pairing moved after the data came in, depending whether the data was good news or bad news. And same thing here, you could say, okay, average range movement, 34 pips. What about the first 5 minutes? Okay, most of them dropped, looks like 7 pips, 5 pips, even less. Some went up. Only 1 dropped significantly in that first 5 minutes. Okay, so you'd have missed out on this one. This one you wouldn't have placed your trade then. The rest of them didn't move yet. If you expect from the past that it should drop in the coming hour, then you could have gotten your entry point within that first 5 minutes. Okay, and we can check after 4 hours, also majority down, not as high of a percentage, 56%, but the 1 hour range seems to be the sweet spot with this announcement. Okay, so with this tool, you not only can get an idea of percent probabilities based on the past movements of what direction will a certain currency pairing move based on how the data comes in when you look at how it moved in the past as the data came in, but you can also get an idea of the time frame. So I might be looking for 35 pips in the first hour and then I get out of the trade because the data shows as it carries towards 4 hours, some of it pulled back the majority of the time. So this type of tool, and the data will look different for different announcements. If I'm looking at the non-farm payroll announcement, the movements will be much different than with the initial jobless claims, perhaps. Or if I'm looking at announcements out of the UK or out of the European Union, out of Japan, etc. There are announcements every day, some of them more significant than others. So on the calendar, I suggest filtering so you're looking at the high-level announcements mostly, and you can do that in the settings here. I can choose to leave off the low-level announcements, which I did, and I left the medium and high-impact announcements. They tend to get larger, maybe more predictable movements on the charts based on how the data comes in. Okay, now we could go on and look at more announcements. I think it's the same process, and I suggest that on the weekends, Saturday, Sunday, if you have free time, look at the announcements for the upcoming week and put together a schedule of which announcements, as you check each announcement out like I just did, look at the past movements in the data, and pick out a few that look like the strongest ones that fit your trading schedule that maybe you could watch as the data comes in and make your trades. And my suggestion would be also that you don't give up after one try. So if the first time you try it, you don't profit, try each one that fits your schedule. They're repetitive each week, each month. The PPI data, the CPI data, they keep coming in again and again. And so you can try each one, say 10 times each, and see which ones are you most successful with. Which ones have you profited more than you lost and seem to be the easiest to trade for you. And then you stick with those announcements moving forward more long term. Okay, so that's one area where we can do fundamental trading on the spot as the data comes in. Now, I mentioned this large symposium that's coming, and it's starting this evening. And I believe the safe havens could have a strong, predictable effect when you have monetary policy being discussed from multiple leaders around the world and talking about the challenges that are happening, talking about the fears they might have about AI and its effect on the demographics of the workforce, etc. And then also talking about tariffs and fears of lowering interest rates too soon. All these topics that are planned, in my mind, create the opportunity for some fear to kick in, for some indecision with trading. And when that is happening, a lot of times safe havens are a good spot to go to. So if we take a look at gold being one of the #1 safe haven instruments to invest in when people are nervous about the markets, then we can start to try and pick out entry points, exit points, trading strategies if you think there could be buying pressure on a safe haven like gold as this symposium kicks off this evening and runs through to Saturday. And so I'll work out a strategy here based on that fundamental setup, that there's a lot of talk that's about to happen from global economic leaders, and it could drum up some fear. So if that's the sentiment and fundamental viewpoint, then now we can just start to look for entry points for gold, maybe in a direction of bullish movement. So as we start to look at the gold chart, maybe we look at the one-day candles to get a bigger picture view. And what we can see is a lot of ranging movement on the one-day candles. And by ranging, I mean, let me get rid of these middle lines. When someone says an instrument is ranging, what that means is it's staying within an upper price and a lower price and just moving up and down between those prices. And so really since back here in May and April, we've seen gold on occasion spike above this line, but stay pretty much below this line. And so factoring out this wick, I can say there's a nice resistance level right in this area where it's tested once and dropped, twice and dropped, 3 times and dropped, 4 times and dropped, and hasn't gotten there yet a 5th time. If my presumption is correct, and that this Jackson Hole Symposium and all the topics that will be discussed will create some fear, at least initially, there could be a driving force for gold to try to go back up at least close to this resistance level, if not break the resistance. It would have to break this resistance level to go to the all-time high, which was here. This was our all-time high on gold, and there's no reason why it can't challenge that if fear kicks in. Now, there's no guarantee, so we want to manage risk in a way that makes sense. But you know, the one option would be if you wanted to buy on gold, you could put your stop loss below this support level. Again, this is a spot where it was hitting and going up, hitting and going up, hitting and going up, having trouble breaking below this general price range for quite some time. So support, resistance, support, resistance, support, resistance, and down here support. So now a standard trade without anything like AvaProtect, if you were buying on this, stop loss below the support, take profit just before the resistance up here. That could make sense, and that would be about an equal amount of risk and potential profit. That's one way to look at it. Because AvaTrade through the web trader and our app actually offers a unique way to protect your trades, I might suggest using a strategy that would take advantage of AvaProtect. Now, you can protect by the hour, and you can also protect by the day with AvaProtect, and the cost changes with trade size and also changes with length of time for the protection. You see the price of the protection. If I go 2 days protection, okay, since today is Thursday, and 2 days protection means 2 business days, 1 day takes it from today to Friday, and 2 days protection then takes me from Friday to Monday. So you see this protection expires on the 25th of August at 5 p.m. That's my time. Okay, it'll tell you the expiration date and time based on your local time zone. So as I look at this protects me today, tomorrow, Saturday, Sunday, and into Monday until Monday evening for this cost here. The potential profit on one lot of gold, that's 100 ounces of gold. So, if it only moves $14, I've made back the cost of the protection, 100 times 14. Certainly, if there's a lot of fear kicking in, gold could move a lot further than that. I mean, the resistance level I drew up here is at 3,435. It's almost $100 an ounce from where the price is now to that resistance. Okay, so 100 times 100 is a lot more potential profit just to this resistance level without having to break it than what I'm paying for the protection. So if I say I want my take profit potentially, if it gets there, to be 34.35, $34.35. Okay, that's here where I drew the line. Look at my potential profit, over $9,500. The cost of the protection is a fraction of that. So 9 to 1 or so, 8 to 1, 9 to 1 ratio, cost of the protection I pay up front. Now I can be patient all the way till Monday to see if this challenges the resistance. And why would I take this position? We talked about the symposium, okay? There could likely be big movement in gold. Maybe it goes the other way. It's okay because I'm capping my risk during that time period. Now, I might not be comfortable paying that much, but I want this time frame. So the only way to lower the cost is I need to lower the trade size. So if I do half a lot, now I'm paying half as much, right? 719 to try and make over 4,700. So I can just adjust my trade size to be the amount of risk that I'm comfortable with a trade. So if I want to risk, say, 1% of my balance, then okay, I need to just lower my trade size a bit. And now the cost of the protection is less than 1% of my balance. So just adjust the trade size, and now the protection cost maybe becomes the amount you're comfortable risking on one particular trade. Okay, so there's the risk management aspect. So the difference here is it's not a stop loss. This is something that you're paying up front, so it comes out of your balance as soon as you open the trade. But now I can sit back until Monday at 5 p.m. and wait for this to hopefully go my way. And to make back this amount, again, if it goes even halfway to my resistance level here, I could close with a lot more profit than what the position has cost me, okay, for the protection. So if I like that setup, the cost of the protection and the possible profit, now I'm ready to buy on my position. Okay, so now I've invested in gold here, waiting for what we hope to be with this move, a lot of stress and tension around the symposium and all the global leaders talking about economic policy, and we'll see what happens with gold in this situation. And by the way, you don't have to have your take profit at the resistance level. You could have your take profit higher at the all-time high, which then increases the potential profitability. I'm being less aggressive with the take profit and just hoping it approaches this resistance level here, that it's been ranging between this resistance and this support for some time. Okay, any questions, comments on the use of AvaProtect or the idea of going with a safe haven like gold when we have this big economic symposium coming up? I'll pause for a moment. And if I do see any questions pop up, as I see them, I'll address them. So, you know, where else can we look for fundamental news? If we're making a move off of the economic calendar, great. If you're available when the announcents come in, or look at the announcements that already occurred. It's what we did yesterday in my session on the Euro GBP, because the data had just come in. So we made a projection as to what we thought the movements might do. But if we leave the economic calendar strategy behind that we've already looked at, and the big picture stuff that you can trade off of, like we just did with this big symposium that's coming and trying to project the effect that would have on something like gold, what other options do we have in our platform, in our app for fundamental news? And where we can go is to the market buzz. So in the market buzz area, we can take a look at any instrument that's tradable with AvaTrade. So we can switch between categories here, and we can click on the specific one that we want to see the most recent news about, okay? And so whether it's the most trending ones, which are the biggest picture items, okay, they're trending the most and you'll find the most articles about them, or we could go with something smaller that interests you, that's not trending as much, but might still be interesting. Apple, not one of the bigger pictures here, but 627 mentions found online. So if we click on that, we can see a breakdown of what's happening with Apple. There's a trend analysis here. So the trend analysis suggests that the price might rise over 8%. If you want to see the technical breakdown of that, click on the trend analysis and you'll get the technical signal. So the technical signal here is a buy signal with a take profit zone right up here at the resistance level that it reached a while back. So we see the resistance where it hit and dropped. We see today's signal, a buy signal, suggesting that it might climb up to that resistance level. So that's the technical side, and it breaks down the technical levels here and the indicators that were used. So you can see that the trading analysts at Trading Central believe from a technical perspective this should rise, that it's in an uptrend zone, and they break down the support and resistance levels for you. But you should probably combine the fundamental news with that. So if you look at the most recent fundamental news that came in, maybe that helps you make up your mind whether you trust that buy signal or not. So we see some news about Apple Watch. Restored blood oxygen tracking attracts another lawsuit. Well, that doesn't sound good. Lawsuits coming against Apple because the product is claiming to track blood oxygen levels, and maybe someone had a problem and assumed they were healthy when they weren't because of the watch. I'm not sure, but if you want to read about that story, you just click on it. There's a summary. You can also read the entire article. It just came out today. So you can read and see what kind of lawsuits is the Apple Watch bringing. And perhaps that news breaking today makes you question whether you should follow this signal. And so as you scroll through the articles and you start to read the most recent news coming out, it will either be neutral in your mind, or it will support or go against whether you should follow the signal. And let's assume we read several articles here that all seemed like kind of bad news about Apple, then maybe I would pass on following this signal today. Or the opposite, obviously. If I read multiple articles that seemed like good news, then I might trust that signal more, and when the US market opens, I would look for an entry point. Okay? The point is you can find the most recent news here without having to search all over the internet. The system basically web crawls and finds from all kinds of sources the most recent information that it can regarding the instrument that you chose. Okay, So that's another tool for you there. If we're looking for another instrument that might have some large movement, especially with the US announcements that are coming up, but also the symposium, I think the Euro-USD pairing makes a lot of sense. And if we break down the technicals on this, let's go to, these are one-day candles. And we see a bit, let me get rid of some of these lines. We see a bit of a resistance level has formed. We see a bit of a resistance level formed here on the one-day candles. Resistance and down, resistance and down, resistance and way down, and hasn't reached that resistance level yet, but some hesitation to go above this 118 level on the Euro-USD on the one-day candles. If we then take a look at 1 week candles, we see that there has been quite a climb. Okay? This has been a strong bull run on the 1 week candles for quite some time, coming all the way up from basically parity, $1 even, up to where it is now near $1.18. And we see some resistance having formed then on the 1 day candles that we just looked at. So what effect could Jerome Powell, who speaks tomorrow at the symposium, if he's going to continue to talk as he has, that he's afraid of tariffs and its effect that it could have on inflation in the US, he's afraid to lower interest rates too soon, he's going to wait for the data, et cetera, then if that strengthens the idea that, wow, he's just not going to lower interest rates in the US anytime soon, you could see the US dollar re-strengthen against the euro, okay? And if you go into it thinking the symposium is going to create fear, usually fear strengthens currencies like the USD. Not always, doesn't always happen, and it could be wrong, but the USD is viewed as somewhat of a safe haven currency, and a lot of times when there are sell-offs on the market, if there's fear on the markets, the US dollar tends to strengthen against a currency like the euro. So if you go into it thinking that, like we did with the gold, that there could be fear, that safe havens could strengthen, and then you look at the technical aspect of this and say, well, it does look like after a huge climb, the euro has reached some resistance on the 1 day candles, then you could start to think perhaps shorting this as we lead into a 3-day symposium that talks about global economic fears and policies, etc., that shorting this could make sense. And so again, if we use something like AvaProtect, it gives you patience. Because there's a lot of volatility when these speakers are going to speak, you could see movement one way before it goes the other way in a large number of pips. So using your typical stop loss, you could get stopped out of a trade before it ever goes the right way. So if you use AvaProtect, for example, and again, if we do 2 days protection to get through all of the symposium, it takes you to next week with the protection. If I do a 1 lot position, it only costs me 330. So I could even do, say, 1.7 lots, and that still is less than 1% of my balance cost. And if I'm shorting this, I have all the way until Monday at 5 p.m. with the protection. I can be patient if it spikes up. I don't have to worry about putting a stop loss or getting stopped out of the trade by hitting a stop loss, because I don't need to put it during the protected time period. Now, as the protection gets near the expiry, then I better check it out. Maybe I add a stop loss if I haven't closed the trade yet. Take profit. We could look at a number of price levels. But if we're looking at 1 day candles, there's a nice support level right here. Okay, it wasn't that long ago that it bounced off this price. It took 1, 2, 3 days of bouncing at this price and then came up. Okay, and so I would be looking maybe to take profit just before this 114 level. So 114.10 could be a spot that might make sense. If there's a big move down, that could pay out nicely. Again, kind of like 9 to 1, 8.5 to 1 ratio, cost of the protection to the potential profit. So on these types of moves, if you're right 1 out of 5 times, let's say, you're profiting nicely. And so you don't need to be right greater than half the time, let's say 55%, 60% of the time to profit. With this type of setup, your risk is capped and you only need to be right every so often to have an overall profit, because the payout here is 8 to 1, 9 to 1, that type of thing. And because we're surrounding this setup with this unique type of protection around a huge fundamental news event like this symposium, we should get big movement one way or another. So we're going to take a look then at the sell setup. We've got risk management done, and we've got until Monday to be patient with this movement. And it looks like everything's in order with the setup, and we can go ahead and put that position in motion. So these are both market moves. We're not so concerned if it goes the wrong way leading up to the start of the symposium. We want to see what happens as really the speeches get underway tomorrow through the day. And so these will wander maybe in and out of profit, and the real strong movement likely won't start occurring until we get into some of these speeches. And it'd be great if it moves the right way sooner, but we'll see what happens once those speeches get underway. I think this is a good place to stop. We've gone through several concept ideas. One, using the economic calendar for announcements as they come in. One, using the market buzz for the most recent news announcements that are coming out about different instruments, and trying to pair that with the technical signals that are within the platform. And then we also took a look at kind of a big headline type event like the symposium and how that might help you try to predict movement of things like safe havens. All right, everybody, thank you for joining. My next session will be next week for my Wednesday evening session, and good luck with your trading until then. Bye for now, and thank you for attending.